And joining us now for more on that story is the company's Senior Vice President, Andy Challenger. Also joining us now is Evan Sohn, CEO of global workforce data and analytics company Aura Intelligence. Also our very own senior economics reporter at CNBC, Steve Leisman. A great roundtable, so to speak. So, Steve, thank you very much. Let's hang on for a second here and go right to the Challenger headlines right now. The highest October job losses in 20 years is the headline. Is it as dire as it sounds?
I think it is a very strong indicator that the labor market continues to cool. This isn't a fresh news story. It is something that has been happening for a while, but these numbers are a significant piece of data in the bucket that says there is going to be continued layoff activity, that the labor market continues to cool and weaken. And we're anticipating to continue to see these layoffs throughout the end of the year.
Steve, you and I had just had a conversation about how, as an economics reporter, in the absence of true government economic data, what else can you do, report on, analyze? Your job has gotten much harder. How much, as an economics reporter, do you look at numbers from Challenger, Gray, and Christmas and say to yourself, what can I do to extrapolate the broader health of the U.S. economy?
Well, first of all, Dom, I was not complaining for public consumption. I love my job, okay?
But your job is harder now.
It's ironic that in the absence of official government data, the economics reporting is harder than it was because we look at a whole series of indicators right now. We should have a list out tomorrow on the website that will show you all of the stuff we're looking at, but there's like 10 or 12 different indicators we're looking at. We know the Fed is doing the same thing, so we have to do the same thing. Investors have to do the same thing. We look very closely at the Challenger data. We knew all of the little components of it, but then what's fresh about what Challenger did is it put it all together and put the context around what happened last month, what happened a year ago, and this is definitely a surge that's going on. Interestingly, Dom, I'll throw it a little bit back to you. My anecdotal observation is that Wall Street is rewarding these companies when they announce job layoffs. So that's something that creates a little momentum out there. What's going to happen if I announce that I'm laying people off? Am I going to get a bump in my stock or not? When that's rewarded, it creates a momentum. So I'm looking at that. We also had Bank of America data, fascinating data. They're looking at on an anonymous basis, at their clients' accounts. Are you getting a paycheck this month? Did you get one last month? Are you getting an unemployment benefit? That shows, I don't know, relative to the Challenger data, it shows we're in a cooling market, but it didn't get worse from October to September.
So you're actually acting like a Wall Street research analyst right now in the mosaic approach, if you will, right? Trying to get all of those pieces together to figure out if you can find a bigger picture overall. One of the other elements, though, you spoke of the job cuts and possibly the rewards from Wall Street.
Right.
So let's turn to Evan Sohn now, because one of the reasons why, Evan, is because for a lot of these companies that say that they are maybe reducing their workforce, part of that story, not the entirety of it, but part of it, is the use of artificial intelligence, either to augment the jobs that are there or to perhaps eliminate some jobs in the future that may not be needed if AI is more prevalent. Just how much of that AI story is part of the jobs picture right now?
Yeah, so first off, thanks for having me. And you're absolutely right. This past month, we tracked jobs, job postings, as well as other data. And when you look at the AI jobs relative to the overall jobs themselves, they actually hit 13%. So 13% of the job posts that we were tracking include AI. And it's not just the traditional AI software development. It's reaching into less traditional logistics and marketing and other areas as well. So I think you're absolutely right, Dominic. We're seeing the loud layoffs, if you will. And I agree with Steve. I think Wall Street rewards loud layoffs. So we're going to see some loud layoffs going on. But at the same time, very precise hiring. What you're seeing on the screen here now is we were tracking software hiring throughout the month of October. And throughout the month, it was dropping down, and then it surged at the end. So what is that telling you? It's telling you that we're having a very precise type of hiring that's going on. These are smarter companies acting smarter in terms of incorporating AI and overall productivity into their overall workforce.